Alan, ABB, the Swedish engineering group, warned on profit today. Is it rough weather ahead, or is something more complicated going on here?
I think it was probably a one-off. The company said that about 3/4 of this $260 million charge for this quarter was really due to a problem in some North Sea installations of 3 separate wind farm projects. I'm not sure that's going to be repeated soon.
Yeah, the weather around there can be pretty rough. But how large a proportion of its business is power systems, and the rest of the business, how is that looking?
The rest of the business seems to be on track to meet all of ABB's targets. Power systems itself isn't very big. It's 5% of 2012 EBITDA, and probably after this charge even less so of 2013. So it's not overly influential. It's an important part of their business, but we shouldn't overweight this problem.
Now, the business ABB is in is part of the wider debate here on Next on whether we're going to see a capex recovery in the next year or two, and whether companies are really going to start spending their cash. I mean, how do you see that?
It's interesting. ABB actually is representative of a lot of companies that are, free cash flow positive, can pay a dividend. They're to a certain extent hoarding cash, and the complaint from investors, not so much at ABB, but companies maybe generally, is spend this cash. Don't do it wastefully, but please could you start investing? Over 60% in a recent Bank of America investor surveys were indicating they would like the companies to do this. This kind of movement in CapEx, when it does come, and it may not come until 2015, 2016, it will help ABB and companies like them a lot. But for now, it seems that companies, they're hoarding cash for a reason. They're nervous about the financial system. The financial intermediaries are a bit weak, particularly in the continent of Europe. And they would like to just make sure they have enough money for a rainy day.
Okay, well, a brief answer here, given the shares fell 4% today. Is ABB cheap for a recovery?
I think it had priced in, it hadn't priced in any bad news. We've had that bad news. That may cause a bit more of softness. It was off well over 4%, as you said. Today, maybe a bit more softness to come, but I think that probably investors will come back to it. It's solidly managed. As I said, free cash flow is there. The net debt will go to net cash probably over the next 12 months. Good dividend. What's not to like?
Okay, well, we're looking for the clouds to clear. Thanks, Alan.